Perhaps the most frequently asked question by entrepreneurs is, how do I value my company for an equity crowdfunding round? Don't worry, I've got you covered. So, unless you are thinking about doing a convertible round, and I have a very interesting article on the topic on my website, I'll leave a link downstairs, you will need to assign a valuation to your company. That is always very, very tricky. Let's start from the beginning and see why it's so tricky. So, the principle for a good deal is willing buyer, willing seller. In this case, the buyer is the investor and the seller is the entrepreneur. And the investor will have in mind that this is a risky operation for them. You're a startup, you're unproven, you don't have a lot of history. So they will want good returns for their risk, right? Probably somewhere in between 3 and 15 times their investment, depending on the risk that they perceive they're taking with you. Obviously, it depends on the industry as well. On the other side, the seller, I yourself, the entrepreneur, will have a lot of interest there. First of all, having enough money to carry out their business plan. So there's that minimum that you want invested in your company, but also not giving away too much of the equity, mainly because you want to retain control, and giving too much away would perhaps make it much more difficult in future rounds to be investable. So my recommendation to my clients is always do not give away more than 20% per round, right? Between 10 and 20%, it's quite reasonable on a seed round or a Series A round, okay? So think about those terms there. And there's also a lot of emotional investments. Who are you putting in your company? Do you want smart money, etc., right? So there's a tension there, clearly, between the buyer and the seller, and we need to find a compromise. We need to meet somewhere in the middle. One of the reasons why it's so difficult to find a valuation is that the other methods that we might use for more established companies do not work for startups. So for more established companies, you would look at things like multiples of EBITDA. So depending on the industry, you would say, okay, I'm ready to pay 3 times the revenue or 10 times the EBITDA, and that's the valuation of the company. Easy, done. Doesn't work here because obviously you might be pre-revenue, for example, or have revenue very changeable through the months, and most likely you will have negative profits. You wouldn't have a positive EBITDA. So that doesn't work for startups. Another way of evaluating a more established company is discounted cash flow. So you look at the cash flow, how much cash is generating that company over the years, and then do some maths there and come to a valuation. But again, you don't have much history. Probably you have negative cash flows. So it doesn't work for startup. Finally, the third method that's commonly used for more established companies is net assets basis. So you look at the tangible assets that a company has, equipment, buildings, etc., and more intangible assets as well, such as brands, IP, things like that. And then you add them all up and say, okay, this company is valued at this much money. And again, for a startup, this doesn't work because you probably don't have much tangible assets. Intangible assets, you could argue, you might have some IP, you might have some brands, but again, it's very difficult to value once you have, if you don't have a proven business model on top of that. So, what method should you use to come to a valuation for your startup? The 3 methods I would recommend any companies. First of all, look at rules of thumb. So look at your industry, look at other companies that have raised perhaps, and see in that industry what are the rules of thumb. So for example, on the app industry, if you have an idea, good idea that could have a lot of potential in a market that could be growing, etc., but you haven't developed an app yet, it's very difficult to get a valuation more than £250,000, for example. if you have an MVP, an app that's already on the App Store and Google Play, and you already have maybe some users on that app, you could expect a valuation between £500,000 and £750,000. Finally, valuations for more than 1 million mean that probably you have some traction, you have some paying customers there. So look at the rules of thumbs on your industry, and that could be your first approach to get to a number for your valuation. Secondly, finding comparable transactions. So in Seedrs, in Crowdcube, all the crowdfunding platforms, all the successful rounds are stored. You can search them in Seedrs and Crowdcube, and you can look at similar companies. Maybe they're not doing exactly what you're doing, but they could be comparable to yours. And you can look at their valuations. You can look at their main metrics. They're usually public. So that could be quite useful for you to say, okay, if company X has raised in 2020 at this evaluation, me raising in 2021 could make sense to raise at this other valuation, okay? There are other platforms as well, of TechCrunch, Billhurst in the UK, that have lots of data about companies raising. So you could find comparable transactions there and try to position your company somewhere in between. Finally, the third method that you can use is working backwards from an exit, from a liquidity event, okay? So investors will want to know that you eventually will sell the company to another company perhaps, or do an IPO or something like that in 5-7 years. So you could say, okay, in 5-7 years, if everything that my assumptions right now, that could change massively by the way, are right, then I'm going to be doing this much revenue, this much EBITDA, and there you can use one of the methods that we have discussed before to value your company, right? At that point. And therefore saying, okay, if my investors are expecting a 10x return, then you can divide that by 10 and you have your valuation today. So working backwards from that exit and saying that if that's my valuation, this is my valuation today. With those three methods, you can kind of get a feeling of what kind of valuation you could look for in an equity crowdfunding campaign. But the best, the ceiling proof of your valuation would be finding a cornerstone investment. So discuss with many investors, and when somebody is ready to invest at a given valuation, then that should be your valuation for the equity crowdfunding round. Say you want to raise $1 million on your equity crowdfunding round, and you found an investor that can put 250,000 and a valuation of 10 million, say, then that's your valuation. Okay. So with that said, if you have any questions, please comment down below, and I'll reply any questions on this video. Until the next one, please share, subscribe, comment, and I'll see you in the next video. Bye.